On April 9, 2025, the Reserve Bank of India will announce its latest interest rate decision. It may sound technical, but this move can affect everything from your home loan, EMIs to the price of groceries. So, what exactly is the RBI deciding and why does it matter now? At the center of this announcement is RBI Governor Sanjay Malhotra. He faces a situation where the Indian economy is dealing with both global and domestic pressures. One of the biggest concerns right now is the trade conflict with the United States. Recently, the US imposed a 27% tariff on Indian goods. That's a significant change. As per Bajaj Broking research, this one decision could reduce India's GDP growth by 20 to 40 basis points. In simple terms, growth could drop from 6.7% to around 6.1% in the next financial year. So here's the first big question. Can lowering interest rates help India balance the loss from these tariffs? Governor Malhotra has already cut the repo rate by 25 basis points in February. He also added $80 billion into the system to increase liquidity. Many experts believe another cut of 25 basis points is likely to bring the repo rate to 6%. But what happens if the global economy slows down further? There's growing concern about a possible global recession, especially with the US keeping its interest rates high. If foreign investors pull out money from Indian markets, it could weaken the rupee. A weaker rupee means higher import costs, especially for items like fuel and essential raw materials. Here comes the second question. Will a weaker rupee make inflation worse in India? In February 2025, India's retail inflation dropped to 3.61%, the lowest in 7 months. That was mainly because food prices fell. But the RBI still expects inflation to average around 4.2% this year. So is inflation under control or just taking a break? A hotter than usual summer or poor crop production could push food prices up again. Also, if the rupee weakens, imported goods get more expensive, which can bring back inflation pressures. Meanwhile, the RBI has also been working to maintain enough liquidity in the system, buying government bonds, doing forex swaps, and lending to banks. This has helped ease such shortages in the banking sector. Now, the fourth and final question. Can the RBI support growth without increasing financial risks? Governor Malhotra and the Monetary Policy Committee will have to find a balance, encouraging demand inside India while preparing for more shocks from outside. The April 9 decision is not just about numbers, it will show how India plans to navigate global uncertainties, trade tensions, and inflation risks, all while trying to keep the economy on track. Stay tuned because what the RBI decides could affect not just markets and banks but also how much you pay, save, or invest in the months ahead.